Welcome to Budget Battleground. Now, the suspense is not going to last for much longer because in just a few hours now, we are going to find out exactly what the finance minister has to say in this budget. Now, this is being watched by the global community. It's being watched by Indian industry to see what they're going to be making of it. They're being watched by all sorts of individuals and households and housewives and people planning their own personal finances to see which way they're going to end up. And of course, this is also being watched by the stock market. Let's remember the stock market has seen absolutely fantastic boom over the last so many months. Not a boom that has been restricted obviously just to India. The stock market boom has also been taking place in many other countries globally, not least the United States, which is also seeing a record surge as President Donald Trump never ceases to remind us. Great bull market in America, and that's what we're seeing out here right now. Sometimes a market that is that buoyant, which has risen that much, is looking for an excuse to correct. And are we going to see that excuse in the budget tomorrow? Well, that's part of what we're going to be discussing on this special show. We have Ramdev Agarwal joining us, P.N. Vijay, BJP sympathizer, who's also a great market expert who's been watching it very closely. Dhirendra Kumar is with us, CEO of Value Research Online, one of the best people you can go to for mutual funds and where you should be investing your money before or after. But before we even start looking at the markets, some of the broader trends also need to be looked at. Does it matter at all whether the markets are happy or not? Dr. Jaitley Ghosh is joining us, Professor of Economics at JNU, who thinks that any focus on what the stock market is doing or not doing should be completely incidental to the way we should be evaluating a budget. And it's a great pleasure and a privilege to have with us Sunil Kant Munjal, Chairman, Hero Corporate Service, who's not just a key, leading light of Indian industry, but also somebody, doing a lot of, private investments as well in recent times, and can perhaps tell us which way, that side of the market is going to move. So, Sunil Munjal, why don't I start with you before I come to what the markets may or may not expect from the budget. I just wanted to get from you. We've been talking about some of the possible thrusts that the finance minister might be tempted to make. Now, very clearly, one of the big things that the government has been talking about, something very close to your heart, is this entire startup ecosystem and entrepreneurship, and how can we use that to kickstart not just infrastructure but jobs and have breakthroughs in many important areas. You and many others have been saying that that's really something the government needs to continue to focus on and do a lot more on. What specifically do you think you could be looking for in this budget?
So there's actually a long list of requests that has been made to the finance minister and to the government, specifically in regard to startups. And to be fair to them, they have done many things, but they haven't completed the list yet. Because as you yourself are saying, this is one of the key requirements of India to continue to create new economic opportunities for more and more young Indians as they come of working age. And we currently do not have the capacity to create sufficient jobs. So the startups and encouraging small and mid-sized enterprises and building a more dynamic rural economy are the three pillars which have to be at the foundation of all that we do to grow the Indian economy now. That's absolutely essential. So I'm hoping that the finance minister would see fit to focus on these, as also to give a clear signal of lowering corporate taxes as the entire world is doing, and as India has been expecting over the last 3 years.
Do you think he'll have the fiscal space to be able to do all of that right now? I mean, it is election year, and there is farmers' distress. He's going to have to do things on that.
That's one of the comments which is being made, that a marginal slippage in today's time would be acceptable as long as it's done for a good reason, and he can explain where the money is going. I think then and only then can you allow any slippage. But it's clear that there is buoyancy in the overall economy. Consumption has started to come back. So the expectation is that this improvement should continue into the next few months and into the next year. So I think he will get the headroom as we move forward. Some of it has to be brought in by maybe privatizing more of the public enterprises. Okay. There are 4 or 5 areas in which I think he can focus to build some more liquidity for his own balance sheet.
All right, Jaitley Ghosh, before I turn my attention to the markets and what they're really looking at, I see Ramdev Agarwal also joining us. Ramdev, welcome on the show. Jaitley, your take on the priorities, market, industry, all of that. do you think is that going to be the way we should be looking at this, or only sit and worry about some of the issues that we are finding in joblessness and in farmers' distress?
Well, I think this fact that it's an election year is actually significant, essentially because it forces the government to look back on its own electoral promises and to focus on the issues that concern the people rather than the financial markets. And of course, it's very obvious. The issues that concern the people today are livelihood or the lack of it, the dramatic beating that the informal sector has taken for a number of policy-driven reasons, the crisis in agriculture, and the fact that there simply aren't enough jobs being created, especially decent, good quality jobs. So I think these are issues that should have concerned the government all along over the last 4 years, but at least if they concern them now, it's important. And here I believe the problem is that this particular government doesn't really seem to have the ideas that could do something about it. It's more concerned with window dressing the reality than addressing the reality.
All right, Jaitley, I'm just going to come back to some of those, real factors, as you call them, in a couple of minutes. Let me just turn my attention, though, to the financial markets for a while. Ramdev Agrawal, great to have you with us. The top, analyst whom I can think of who really knows the pulse of the market. This bull market that we have seen, 36,000, very little signs of slowing down. It's part of a global trend, as I keep on saying. It's happening in the US and other countries. Are the markets by now looking slightly tired, and if it's not a great budget or if there's something in the budget that they don't completely like, could we be seeing a very sharp correction?
Yeah, so Vikram, it's all about a few taxation matters which could impact the corporate profit loss and balance sheet. And in direct taxes, because see, there are two forms. One is direct and indirect. So indirect is already being addressed almost on weekly basis by GST Council. As far as direct taxes are concerned, again it is a corporate and personal. So I think markets are far more sensitive to what happens in the corporate taxes. Now there, the global trend is to reduce the taxes, but today looking at the government finances, whether do they have that space to reduce it from 30% to 27.5 or 25, at least market is not expecting anything out there. And so that, but then if there is any, because he was the first person to propose, actually this government was the first one and probably in the whole world to propose a good cut in the corporate taxes right from year one, but they never could execute. And I think Mr. Trump, he came and kind of brought it down from 35 to 20. For sure, if not this year, next year, year after that, we have to bring down the corporate tax rate, and it will be done. Right. Because once America takes the lead, everybody else has to follow. Right. So I don't have any doubts longer term it will happen, but in this budget, whether it will happen or not, that's a big surprise.
Okay, Ramdev, there are two aspects which the markets sometimes react to, and I'm just going to stick with the market for a second. One is, of course, what's happening with the broader economy, what's happening to corporate taxation, what the measures are for the long-term strength of the economy. But sometimes the market gets the most excited, positively or negatively, about specific proposals that are more directly relevant to the market itself. STT, Security Transaction Tax, would be one example of that. The possibility of taxation on equity, long-term capital gains tax, could be another one. Inheritance tax, a third possibility. Some of these measures, would they be, well, red rags to the bull, quite literally? I'm trying to figure out, red rag actually makes the bull attack. This converts him into a bear.
Yeah, so that is possible. Long-term capital gains is much talked about right now. And whether they will increase the period for which long-term capital gains freedom is visible, or they will actually come back and say that 15% is short-term capital gains tax. So the period remains 1 year, but we'll charge 7.5%, 10% or 10% capital gains tax, irrespective of the, anything after, after 1 year. So, it can come in one form or other, but the current situation of the market is such that this particular thing is already priced in. That something is coming in capital gains tax is already priced in. The inflow of the domestic investors is still pretty strong till yesterday, and even foreigners were buying. So I think the possibility of market really cracking because something comes in long-term capital gains tax is not going to be that big. I don't think that danger is there.
Right. I'm going to just turn to Dhirendra Kumar on that note, because if there is one person who is, you were just saying that retail money is coming in, and I can tell you Dhirendra Kumar and others who've been talking about the importance of systematic investment planning and keep parking a part of your money away in equities, been really instrumental in that entire surge that is coming. Dhirendra, do you think this bull market that we are continuing to see, till now, has been because of a bubble or speculative factors, or is it just that surge of retail money? People are saying we need to put some money into mutual funds every single month, mutual funds sahi hai, and doing that, and that's really been driving the bull market. What's your take?
No, it's not a matter of my take. It's a matter of, it's rooted in numbers, and those numbers are in public domain. The kind of inflow that we have seen in mutual fund in a sustained way, and a very, a realistic kind of money, because every time in the past mutual, market-linked investments were made by investors, it was always seasonal, it was sporadic, it happened in 2007, before that it happened in, 1998 or, 1992, when a lot of investors got up and got excited about markets, invested to lose money. This time round, it's quite unusual. Steadily, the money is flowing in from individual investors. His environment has changed. The real estate as an investment avenue has declined substantially. It has lost its charm. The fixed income rates, the interest rates have come down for, forcing a lot of retirees and people who depend on their investment for income, for steady income. They have been forced to think in terms of optimizing their return. And that is driving them to a very different kind of fund. Balanced funds have turned big. SIP has turned, right now.
And that's part of what is driving the bull market.
Yep.
Sunil,
yes.
Sunil, if I could just get you in on that point before I turn to P and Vijay. The underlying state of India Inc. or the Indian economy, when you have a bull market, sometimes it's because companies are really doing well, earnings are growing, and therefore there's a reason to believe that that's going to continue to happen. Stock markets are up. Sometimes it's more of a speculative bubble. What's your sense of the health of India Inc. right now, even before the budget, and therefore what do you think we should look forward to after the budget?
So it's clear that the economy, especially industry, has gone through a tough time in the recent period. But over the last few months, or let's say I would say last 2 quarters, you are starting to see consumption come back. The large investment that was made in capacity building, in some sense people say was too hurried when the last bull run was going on in industry now. I'm not talking the stock markets. And people built excessive capacity which did not get taken up, and the markets did slow down. Consumption markets slowed down. We are beginning to see now in different parts of India, in different verticals of industry, consumption start to pick up. And I think the cycle is clearly upwards. Whether we will see the full recovery in the next few months, or will it take us another year, that only time will tell. And some of it may actually depend on what happens tomorrow. Because industry right now is looking forward to something like the old incentive that you had to create new capacity and investment allowance. But what we are also saying is add a rider to that, to those who can create more jobs. So make a matrix. Those who can create more jobs should get some incentive, as is done worldwide, because that is a crying need for us as a country. So it has a twin benefit. Okay. It creates immediate opportunities, and as people get better jobs and become more prosperous, they also become better consumers. So it creates a virtuous cycle for growth in the economy.
All right.
And I'm hoping we will see 2 or 3 signals towards that in the budget announcement tomorrow.
All right. I'm sure Jaitley is going to come in and say that if you do a lot for farmers, that could also help in that. But just turning to you, P and Vijay, on all that you have heard, you've been very closely associated with the BJP for a long period of time. How much of this do you think is actually going to be reflected in the budget? And you've also been watching the markets and others very closely. What is your sense of the way the markets have been and the health of the economy? Because I want to also flash up, while you are answering this, the latest data that's coming in on core sector growth, for example. It's not necessarily a particularly pretty picture if you're seeing that. So core sector growth not looking that good. Many sectors are falling. So the exact nature of the health of the economy is still a slightly open-ended question right now.
Yeah, Vikram, I think it's a moot point, because the economy is surely having problems after the demonetization in GST, and the rural distress is there. Maruti and Hero may report very good sales, but they represent the top 10 to 12% of the retail demand, of the rural demand. If you go down below, and if you look at FMCG sales, and if you look at many other parameters, there is obviously a very strong rural distress, which is getting reflected in overall lack of rural demand. Now, why, as Dhirendra was saying, why we got that 29% increase in the last 1 year, in spite of all economic indicators going south, the growth was down, IIP was down, was because of the huge inflow. With the rupee being one of the strongest currencies in the world, foreigners found it fit to come to India.
But isn't that slightly scary? If you're saying that the indicators aren't that great and this bull market has been happening really because people have been putting money into it, then there is a danger that at some point they start withdrawing money and everything slides. You're saying that the fundamentals, that the stock prices are ahead of their fundamentals.
Absolutely. People, if the stock market's gone up 29%, Vikram, it's not supported by fundamentals. That's for sure.
Wow,
and now,
that's a strong statement.
Absolutely.
Ramdev Agrawal, would you agree with that? PN Vijay saying
the price earnings ratios in the market are at a very high percentage compared to the earnings growth.
So that should make people nervous. Run ahead of fundamentals, the stock prices. That's what PN Vijay is saying. Ramdev Agrawal, would you agree with that?
Yeah. So markets are pricey somewhat. So yes, markets are pricey, but don't look at only P multiples. P multiple may not be the right measure because see there are two components in valuation. One is the P and second is the earning. So what happens is when the economic cycle is down, the corporate earnings are typically low.
All right. Carry on, Ramdev.
So when the earnings are down and P multiples are high, so what happens is that the P multiples look high, but if you look at the broader measure like market cap to GDP, so we are at one time, whereas US is trading at 1.6, 1.65, which is what was the our levels when in 2007 market crashed. So India is pricey right now for the current given level of earnings, but it's not outlandish in the sense that yes, 10-15% correction, there is a good scope for 10 to 20% correction if everything falls against the market. But I don't think it is kind of a 2007 kind of situation where people can lose their shirt and they should not come. No, I don't think so. There's still a reasonable market, and one has to be very careful.
Yeah, but be careful, 10-15%.
Ramdev is a great funds manager, and I respect what he says. I'm not presenting a doomsday scenario, but look at it this way, Vikram. I want you to look at fundamentals. The Indian markets had a sweet run for 3 reasons. Mr. Modi was very lucky with oil prices, and we had an interest rates falling down like anything. Okay, and third was there was a high level of expectation that Modi will deliver. Now, rightly or wrongly, as we sit here today, oil is firmly entrenched above 70 with all the implications for the fiscal deficit and for the current account. Secondly, interest rates are very high. So where is the macro for me to buy?
Okay, fine. Let me quickly get final takes. I'm almost out of time on the show. Let me get takes from the remaining people. Jaitley, you want to come in on this at all, on the state of the economy very quickly?
Yes, I do. I have to say, Vikram, I'm really surprised that you're spending 29 minutes of a half-an-hour show talking about the stock market alone, when really you should be asking what is this budget going to do for the state of the economy, for the macroeconomics, for the conditions of the people. Yeah. I'm amazed because this is actually an economy that is very weak. It's crying out for more public expenditure. There is concern that there isn't fiscal space. There seems to be no ideas about how to generate fiscal space. We are an economy that is on a verge of a crisis because there's a stock market bubble. And instead of talking about these real issues which will affect all the citizens, you're obsessed with minutiae of the stock market. I'm really very surprised.
Jaitley, we've been discussing it with you as well. We are asking about the state of the economy precisely for that reason. If you're saying that we are about to have a stock market bubble collapsing, it will have its impact. And yes, this is part of a series. But you're here to draw our attention back to the real economy, which as I started by introducing you. So you think the economy is looking really weak?
I do, and I believe that there is a real problem in terms of not just consumption demand, but lack of investment, and certainly in terms of employment. There's a real inability to find ways of generating new employment, good quality employment. And there's a real problem because the informal sector, the viability of honest small enterprises is being hit on a daily basis.
All right. Sunil Munjal, last word from you to wrap up.
So, I think for sure tomorrow's budget will focus on the agriculture, rural economy and infrastructure, because that's the stated position of the government. And because, and it's a comment somebody made earlier, because we are only a year away or so from an election, there will be some focus on people, and rightfully so. But I do hope that we do not lose focus on the developmental impact part of what's going on, and the continuing reform that needs to continue all the way through. I do hope we will see continuation, and I'm reasonably confident that the FM is going to try and balance both these interests tomorrow.
All right. We are out of time, but Dhirendra, I'm just going to get you to say, are you more optimistic for tomorrow or pessimistic on the way the markets are likely to react, and all of us?
On the short run basis, if the capital gains tax in any of the three possible formats that is being talked about comes about, I'm pessimistic in the short run. But I think, long-term people don't have a choice. Household savings, and of course, what the economic survey was saying, that's a very challenging situation. The general decline in the level of savings in the economy is also quite alarming.
All right, we're going to have to leave it there for the moment, but I think lots for the finance minister to think about tomorrow. There is this entire farmers' distress, the state of the rural economy, the state of the economy in general in certain areas, core sector growth, which we were just talking about, and if you're looking at the joblessness situation, some of those factors will have to be balanced. Yes, there has been this absolutely euphoric, bull market rally for quite some time. Is it going to continue to sustain? Is it going to start to teeter? We're going to get a lot of the answers. So, budgets coverage special all day long tomorrow, and we're going to try and take you through to the finance minister's speech and all of its implications. So do remember to watch that. Bye for now.